Nissan Joseph, who is the Chief Executive Officer of Metro Brands, joining us this morning. Sir, thanks so much for taking the time, first of all. And I hope that you heard what my colleague and the research analyst who tracks your company was just speaking about. And ultimately, I think your investors and also the research community would be curious about whether or not you're going to pass on the entire benefits and when you expect those benefits to accrue for you.
Well, thank you for having me this morning, and thanks for those opening comments, Mahima. I just want to maybe get alignment on some numbers. First of all, 44% of our sales come from product that's under 3,000 rupees, right? So you can extrapolate that down. It'll probably be closer to 40% of all our shoes sold comes underneath the 2,500 mark. And, depending on the banner that we have, whether you're Metro, Mochi, or Crocs, or Walkway, you'd have a different percentage of business that falls into that GST slab that just saw about a 7% slash in GST, which is a terrific news. What we plan on doing is turning that entire amount over to our consumers. I think as you start lowering prices, that spurs demand. In the long run, we plan on using that to spur and continue our growth run. So we plan on turning those GST rebates, so to speak, or the lowering of GST right back to our customers starting as soon as it's effective. I believe it's on the 22nd of September.
Okay. Mr. Joseph, morning. Hiral on this side. Really happy to speak to you after a really long time. Now, taking the boost in demand that could be coming in for a portfolio which is below that 2,500 mark, which is still 44%, in terms of the overall contribution, would you say this would lead you to probably enhance your guidance for the future, because your long-term 15% sales CAGR is what you've looked at, and mid-teens in terms of profit margins, a 30% EBITDA in terms of margins? Does this get revised? Let's not only talk about 26, but even if you have to look at 27 or 28.
I think every time you have a demand spurt, it helps a lot of those metrics that you just shared, Hero. But having said that, I think what's important to note is that we're talking about a CAGR. We're talking about a long period of time. And, retail has its ups and downs, its highs and lows, its headwinds and tailwinds. So I think we continue to feel very comfortable about that number. And just in full disclosure, we haven't hit that number for the last few quarters, so we have some catching up to do. The good news is, does this put us in a position to catch up to that number faster? Absolutely. So I think that's the perspective we would take on it.
Mr. Joseph, just curious. So, of course, I'm anticipating, and a lot of people are, that the festive season gets a fillip on account of this GST reform. I want to look a little further down the line, because you have a 2,500 mark that has been spoken about right now, and I'm just wondering whether inflation will catch up and force you to perhaps either scrimp on margins or or decide to push above that and say that you have most of your mix or more of your mix that contributes to, over that 2,500 rupee mark. I'm wondering how long you anticipate this benefit will accrue to you.
Well, I don't see it as a time-bound benefit, right? It's a matter about spurring demand, right? And I think what it really does, Neeraj, on the other hand, is it makes the price point of 25.99 and 26.99 obsolete, right? Because you would rather sell it at 24.9 and get the GST benefit for both sakes, So we would not have to if you do the math, it makes no sense to have a 26.99 price point, right, out there in the market once this goes into effect. So I think what you'll see is we do believe there's elasticity in that price demand curve, and what happens when you hit certain price points is it does help that demand. There's also another factor, right, that goes into this that I don't think a lot of people realize outside of the shoe business. All of us in the shoe business realize that when you take products on sale and you mark them down, and so let's say you have a 5,000 rupee shoe at the end of season, when you've gone through all the other stuff, you take that down to a 40% markdown, right? So that would go down by 1,600 rupees roughly, and consequently, you would want to get that below the 2,500 mark, right? So it would push some of the end of season sales products below the 2,500 mark too, which then further creates more demand.
So does this mean that, the festive sales will be coming in early for Metro Brands, and, to take and manage your existing inventory with old MRPs and a smooth transition to the new pricing, the sell-off in terms of old stock at a discount will be done much earlier? And if that is the scenario, do we see any revenue impact in the second quarter?
I think it's the positive revenue is really the increase of demand that comes when you lower price points. So that's where the positivity comes from. As far as clearing out the old inventory, it's not a question of old versus new, right? It's a question of what is tagged. So we can instantly start giving them the benefit of the GST discount right away. And then the new products would have that rolled into the price. So it's not new versus old. It's really a new price point that we're trying to get, but we can reach it a couple of ways. But the bottom line is, we plan on turning all those GST savings back to the consumer in all of our banners.
Mr. Joseph, I'm just curious. When you say 44% of your sales come from that sub 3,000 mark, for a lot of manufacturers, of course, you have that blended margin, but then the products that you sell at the lower end of the price points, a lot of times don't give you as much margins. Is that the case for you? And would you therefore have to work much harder to reach that 30% EBITDA margin that you've aspired to?
No, we don't see a distinct difference between, product that might be at 5,000 rupees versus a product that's at 2,000 rupees. Our sourcing structure, our margin structure remains pretty constant. So we don't see that. And I think you mentioned inflation. Inflation is always going to play a part of it. And as inflation comes up, you try to reduce some other costs, so you try to get operating leverage to try and maintain that trajectory of that 15% or the mid-teen PAT numbers that we guide to.
So Joseph, the other aspect is in terms of the new GST structure, particularly when you talk about the lower rate on the value segment, will that have a significant impact on your input tax credit claims? How does that work, and the impact in terms of your financials?
Yeah. So first of all, we don't see this giving a benefit to any of our margins, right? Our margins are going to continue to remain the same simply because all our margins are calculated net of GST taxes, and we have every intention of turning these lower GSTs back to our consumers. As far as input tax credit, we've never had an issue with it because we've never had an inverted tax structure. But so that's not going to be an issue going forward either.
Okay. Last question coming to you, Mr. Joseph, right now. In fact, just to highlight, the stock is at the day's highest levels with gains of 1.6% coming in there. We started off when this stock was seeing probably or was trading in the negative. Right now, day's high level is what you're seeing. In terms of the premium segment, are you expecting any shift in consumer behavior where, the shift could happen from premium to the value segment, taking the uptick in terms of taxes into consideration?
Yeah, I don't think you're not going to see a premium consider go into the value segment, so to speak. What you're going to see, like I mentioned earlier, was you're going to see a vacant price point between 2,500 and about 2,700 rupees, right? Because it makes no sense to sell items in that price point because you're just charging the consumer more GST. That's all you're doing instead of giving it to them at 25 and paying considerably less GST, right? So that in itself might create a slight bit of a shift, but the premium consumer is always going to remain premium. We've doubled down with our brands like Clark's. We continue to have our own Metro Mochi, our J. Fontini brand, our Da Vinci brand, where we continue to cater to a premium consumer, and we don't see that slowing down. And the price delta is significant enough that we're not going to see them want to swing into a lower price point because, there are different levels of product that we sell, right? And what's at 25 is not the same as what's at 5,000, is not the same as what's at 10,000 rupees.
Absolutely. Point well made. Mr. Joseph, absolute pleasure speaking with you. Thanks so much for taking the time and for speaking to NDTV Profit.